Zuckerberg, I say in public comments even, has been in a very understated way aware of that for a long period of time. So, to me that just shows what a nonsense these tech valuations were, that, Facebook themselves behind the scenes knew they had a huge problem with their model, and yet the Facebook price just kept going up like crazy. The disconnect between, market perception and the reality was just incomprehensible. So, getting back to Jeff's question, can that absolutely unjustifiable gap between perception and reality, can that resume? Maybe to an extent it can. I think it's damaged, so I think it's hard for it to get back to that full scope that it was before, but I think you can certainly see a tech bounce, and if you do, to us that's really worrying, because it just means again that you've got this fragile, almost fake sector that's actually leading the economy.
Sam Stovall has described what's going on as a self-writing process around valuations, but not the beginning of a bear market, and he points to the S&P PE, which he argues has gone from 19 times to 16.5 times on a 2018 earnings basis, and the tech multiple from 20 times now to 17.5 times. He makes the case ultimately that it's not over yet. I know you're more bearish about the outlook to the end of the year here, but that what we've got here is just an adjustment. This is nothing more than an adjustment.
This could well be. This could well be. But I would counter that by saying, even if it is, at some point there's a massive day of reckoning coming. If we look at,
there's always a day of reckoning coming, Paul. But, okay, I mean, those ADP jobs numbers overnight indicate surely that the private sector of the U.S. economy is still doing all right.
No, not really. There's no connection between performance of the U.S. economy and ADP job numbers anymore.
So the fact that people are employed, paying their taxes, and taking home enough money to feed their kids is not relevant to the confidence of investors in the United States?
That would be. However, the ADP job numbers aren't telling us that. All they're telling us is that people are in some form employed. What we've been tracking for a long period of time is number of people in employment multiplied by average hourly earnings. So actually, how much does America earn? And if you look at that, there is a very significant long-term downward trend. And I would argue the amount of money that there are two things that influence the consumption in the human side, the consumer side of the US economy. One is how much money people have to spend, so that aggregate number, and the second is how well that is dispersed. And aggregate amount of income is falling, and dispersion is getting worse and worse and worse. So average Joe in the street has got a lot less money in his pocket than a year ago, 2 years ago, 3 years ago.
Still watching? Perfect. Click here to watch another great video from CNBC International. Oh, and don't forget to subscribe. Thanks for watching.